Hey everyone, welcome back to Corporate Decoder. Today, ISQ Open Infrastructure Company LLC just filed an 8K report, and I'm seeing some interesting moves in their share sales and asset acquisitions. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company has been busy selling shares and buying new assets, and we are going to break down exactly what that means for investors. Alright, let's dive into this recent filing from ISQ Open Infrastructure Company LLC. The main event here is around some unregistered sales of equity securities and a couple of new asset acquisitions. It looks like the company is actively raising capital and expanding its portfolio. So, what exactly happened as of June 1st? ISQ Open Infrastructure Company LLC sold a bunch of shares that did not go through the usual registration process with the securities regulators. This is often done through private placements, meaning they sold these shares directly to specific investors. The filing lists various classes of shares like Series IF, T shares and Series DF shares, and shows the number of shares sold and the money they brought in. For example, they sold 75,837 FT shares under Series I for over $2.4 million. Then under Series TI, they sold 637,287 F shares, bringing in over $20 million. This pattern continued across several share classes, totaling a significant amount of cash. The company states that these sales were exempt from the normal registration rules under the Securities Act of 1933. This usually means they are selling to what are called accredited investors, who are a bit like professional investors deemed to have enough financial knowledge, or to investors outside the United States. This is a common way for companies to raise funds quickly without the lengthy and costly registration process. The total cash raised from these share sales was over $31.9 million. This is a substantial amount of money that the company can now use for its operations or investments. Now, what are they doing with this money? This filing also highlights some key asset acquisitions made in June. The company added two significant assets to its portfolio. First, they invested in Mercury Data Center Holdings Limited. This company is apparently a big player in data centers across Mexico, Central America, and the Caribbean. They invested in Cube Safety HoldCo Limited, which sounds like it is involved in traffic management and road safety infrastructure across Europe and North America. These are substantial investments in what seem to be growing sectors. Following these activities, on the 29th of June, the company's manager figured out the transactional net asset value per share for different classes of shares as of May 31st. This is essentially the price at which the company sells its shares. Looking at the table, you can see various classes like FST shares and F. IT shares with their net asset values per share. For instance, FST shares had a monthly transactional net asset value of about $37 million and over 1 million shares outstanding, with a net asset value per share of $32.35. Similarly, IT shares had a transactional net asset value of $3.5 million and a per share value of $32.49. It is important to note that some share classes, like Class I shares in Series 2, were only recently sold, with their initial transactional net asset value per share set at $25. This shows how the value of different share classes can vary and how new issuances are priced. And to top it off, on the 30th of June, the company declared a special cash distribution. This is good news for shareholders as it means they are returning some profits. Across all the listed share classes, both in Series I and Series 2, the net distribution per share was declared at $0.3424. This distribution is going to be paid out to shareholders of record on the 29th of June. The cash can either be paid directly or reinvested back into more shares for those participating in the company's distribution reinvestment plan. The company mentioned that their current financial situation allows for the consideration of regular future distributions. This is a positive sign indicating a healthy cash flow and a commitment to returning value to shareholders. However, they also rightly point out that any future distributions, including their frequency and amount, will be decided by the board and will depend on the company's financial health and market conditions at the time. For even more details on these net asset values, you can refer to Exhibit 99.1, which is part of this filing. This exhibit would provide a deeper dive into the calculations and the specific figures used. Finally, signing off on this report is Star Froelich, the Principal Financial Officer, dated the 2nd of July. This signifies the official filing of all the information we've discussed. So, looking at this filing, ISQ Open Infrastructure Company LLC is clearly in an active phase. They've raised a significant amount of capital through selling shares and are putting that money to work by acquiring businesses in the data center and infrastructure sectors. The declared distribution is also a positive signal for current shareholders. However, it is important to remember that these were unregistered shares, and the company is an emerging growth company, which might mean they are still building out their long-term strategies and financial reporting. The overall direction seems to be one of expansion and capital raising, but investors should always do their own due diligence on the specific risks associated with privately placed securities and the new industries the company is entering. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.